Right, so all of you enjoying studying about the sections of the Companies Act 2013? Interesting to know section 143, what are the duties of the company auditor? Duty as to inquiry 143.1, duty as to reporting 143.3, 10 points of reporting over there. What are the 10 points? Information proper, branch books, AS adverse, directors maintenance, IFC others. And others is not others is main. Pending litigations, material foreseeable losses, delay in transferring amount to the Investor Education and Protection Fund. D has been omitted. E, whether any funds have been advanced. E2, whether any funds have been received. E3, that representations under 1 and 2 do not contain any material misstatement. F, whether dividend paid or declared, is it in compliance with section 123? And G, whether the company has an accounting software which has an audit trail feature which is operated throughout the year, not tampered with, and which has been preserved as per the statutory requirements for the record retention. Okay, right. So what are we discussing over here? We are discussing the duties of the company auditor. Are you all with me? Yes, what are we discussing over here? We are discussing the duties of the company auditor, right? So now let's look into the next duty of the company auditor, duty as to the branch audit, right? So branch audit is given under section 143, subsection 8. Right, branch audit section 143 subsection 8, which is regarding the duty as to the branch audit. Okay, now a branch of a company could be in India, or a branch of a company could be outside India, right? It could be in India or it could be outside India. Branch in India. Who can do the audit of a branch of a company which is in India? One, the company auditor himself. That is the auditor appointed under section 139, or any other person who is qualified for appointment under section 141. Right, so company auditor himself or any other CA. Branch outside India, who can do the audit? Company auditor himself, or a person who is qualified under section 141, or a person who is duly qualified to act as an auditor as per the laws of that country. Right, a person who is duly qualified to act as an auditor as per the laws of that foreign country. Right, so like if the branch of a company is in India, right, so Growth Limited has a branch in India. Who can do the audit of that branch? CA Sparkle or CA Joy. Right, say another CA can also do the audit of the branch. Right, branch outside India, say Growth is having a branch in America. Right, so now who can do the audit of the branch in America? CA Sparkle, CA Joy, or an American CPA, a person who is qualified as per the laws of that foreign country. Right, so branch in India and branch outside India, who can do the branch audit? In India, who can do the audit? Company auditor himself or any other audit, any other chartered accountant, who's any other person who's qualified under 141. Outside India, who can do the audit of the branch? One, company auditor himself, or a person who's qualified to be appointed as an auditor, or a person who's qualified to be appointed as an auditor as per the laws of that foreign country. So like if the branch is out in US, then who can do the audit of that branch? Even the American CPA, even he can do the audit of that branch, or yes, of that particular branch. Say the branch is in Germany, so whosoever is the German CA, right, they can also do the audit of that German branch. Okay, and branch auditor, to whom does he submit his report? Branch auditor, yes, branch audit report, he submits it to the company auditor. Right, so branch auditor, to whom does he submit his report? He submits his report to the company auditor. And we had also discussed SA 600 using the work of another auditor who was nobody but the branch auditor. And what evaluation had we discussed? C cube ADV. Right, what is C cube ADV? Consider the competence, coordinate with the other auditor, also consider the significant findings of the other auditor, advise the other auditor, discuss with the other auditor, and also visit the other auditor if the need be. Right, so this is duty as to branch audit. Okay, is 143.12 also applicable to the branch auditor? Yes, 143.12. If branch auditor, you come to know about any fraud, do you need to directly report it to to the central government? Yes, you need to directly report it to the central government, obviously provided it is 1 crore or above, right? Provided it is 1 crore or above. So 143.12, is it also applicable to the branch auditor? Yes, also applicable to the branch auditor. Okay, right. So here we have this question, one duty to report on the fraud, and then we will look into this question over here, question number 39. Right, so question number 39, D Limited is a Delhi-based company having turnover of 25 crore, has a branch at USA having a turnover of 10 lakh as converted from US dollar. The area where the branch office is located in USA was severely affected by the storms, and the office along with all the accounting records was completely destroyed. Due to the unavailability of the records, the financial statements of 16-17 did not include the figures pertaining to the said branch. The company financial statements, did it include the branch figures? No, due to the unavailability of the records. As the statutory auditor, how will you report on the same? So do the company accounts give a true and fair view? No, they do not give a true and fair view. Right, so first you write down the qualifications for the branch auditor. Then in the given case, what does it say? It does not include the information regarding the branch. Under such a circumstance, which is beyond the control of the entity, when the accounting records have been destroyed, the auditor's opinion has to be modified. The auditor also has to mention in his report the effect on the financial statements due to the non-inclusion of financial data pertaining to the branch. That means it's a limitation on scope. It could lead to a qualified or a disclaimer of the opinion. Okay, question number 10. Amuda Limited is a Mumbai-based company. The total turnover is 10 crore for 15-16. The company has a branch at an area which was recently affected by flood. The transportation services are not available due to destruction caused by the flood. The branch office records turnover of 1,50,000. No audit of the branch has been carried out. The statutory auditor of the company has made no reference of the above branch in his report. Right, so should the statutory auditor make a reference of the same in his report? Yes. So again, first what you need to write down is the qualifications of the branch auditor in the given case. Right, so is it required to get the branch audited? Yes, the company has to get the branch audited. In case no branch audit has been carried out, company auditor is required to mention the fact in the audit report. No reference of the above branch in statutory audit report is not correct. Now you're looking at the question, it looks like the branch is not material. You understand, because turnover is 10 crore and that branch turnover is only 1,50,000. So maybe you can just mention about it in the other matter paragraph, that one of the branch which is not material has not been audited. But had it been a material branch, like, say the turnover of that branch was 3 crore, then it could have led to a modification to the audit opinion. Are you able to follow what I say? Okay, right. Question number 41. Lakshya Limited has a branch office located outside India. Company is in the process of appointment of a non-CA as an auditor, but otherwise qualified person from the country where the branch office is situated. Yes, what did we say? Branch outside India, can it be audited by a person who is qualified as per the laws of that foreign country? Yes. Now, statutory auditor is of the opinion that non-CA cannot be appointed as the branch auditor. Comment. You are also required to discuss the applicability of 600 in regard to branch located outside India if non-CA is appointed. Right. So again, you write down the qualifications of the branch auditor. Then you say a non-CA can be appointed as an auditor of a branch office located outside India, provided he is qualified for appointment as an auditor in that country. And then you also write down the C cube ADV. Right, you need to do the evaluation of the branch auditor. Okay, coming to question number 40. 2. Raj Limited has a branch office which maintains its separate set of books of account. The statutory auditor of Raj Limited and its branch office is conducted by two separate forms of CAs. Raj Limited being the company with the head office, its statutory auditor always intervenes in the work of the statutory auditors of the branch. Due to this, the audit completion takes the longer period. Due to the company's internal policy, they need to continue with two separate auditors for the head office and the branch office. Please explain the aspects relating to the reporting and the responsibilities of the parent auditor and that of the branch auditor. Right, so again, first you talk about the qualification. So did you notice all the questions? What is the first thing which we are writing about is the qualifications of the branch auditor. Then what does it say? The branch auditor has to submit his report to the company auditor, and also reporting of fraud by the auditor will also extend to the branch auditor. What did I tell you? 143.12, is it also applicable to branch audit? Yes. And where the accounts of a branch are audited by a person other than a company auditor, there needs to be a clear understanding of the role of such auditor and the company auditor in relation to the audit of the accounts of the branch and the audit of a company as a whole. There is a great necessity for a proper rapport between these two auditors for the purpose of an effective audit. And again, what you will write down is the C cube ADV. Right, C cube ADV, that is the evaluation. We say, that principal auditor, you need to send a checklist, you need to send a questionnaire to the branch auditor. Right, so that is the point. Then question number 43, Bhishma Limited decided to appoint Mr. Rajveer, chartered accountant, as the branch auditor for the audit of its Lucknow branch for 1819. The decision to appoint the branch auditor was taken by way of the board resolution in the meeting of the board of directors of the company held in April 18, subject to shareholder approval in the general meeting scheduled to be held in June 18. Right. Meanwhile, the principal auditor of the company raised an objection that branch auditor cannot be appointed without his consent. Advise whether the objection raised by the company auditor is valid. Right, so now does the company auditor have any interference? His consent is required for the appointment of the branch auditor? No. So again, in the answer, qualifications of branch auditor in the given case, thus the objection raised by the company auditor is not valid as per 143.8. The board has the authority to appoint the branch auditor, but it should be approved by the shareholders in the general meeting, right? But it needs to be approved by the shareholders in the general meeting, right? So question number 39 up to 43, right? Question number 39 up to 43 is regarding the branch audit. Right, so question number 39 up to 43, right? So duties relating to the branch, right? So question number 39, 40, 41, 42 and 43 is regarding the branch audit, right? It is regarding the branch audit, right? Then there is another question over there, right? Yes, there is another question over there which is regarding the rights of the company auditor, right to receive notice and attend the general meeting. Yes, what does it say, this question? Question number 38. An auditor became aware of a fact regarding a company only after he had issued his audit opinion. Does anything come to your mind by reading this first sentence? An auditor became aware of a matter regarding a company only after he had issued his audit opinion. Right, so subsequent events, SA 560, you understand that, right? It's a fact that becomes known to the auditor after the date of the audit report. Had he become aware of the same prior to his issuing the audit report, he would have issued a different opinion, comment. Right, so one we can write in the answer about SA 560, and second it says, now that you've come to know about a fact after the date of the audit report, you still have one more weapon with you. What is one more weapon which you have with you? You have the right to receive the notice and attend the general meeting of the company. So again, at the general meeting of the company, you can bring it to the attention of the members, right? So it's also to be considered as a subsequent event, right? So question number 38 is regarding the right to receive notice and attend the general meeting, which was there in the rights of the company auditor. What is one of the right of the company auditor? To receive notice and attend the general meeting. So there we have the question number 38. Right to receive notice and attend the general meeting, right? Then question number 39 is regarding what? Right, question number 39, the duty to report the fraud to CG, right? That is regarding the, sorry, yes, I think I've missed out one or two numbers here and there. Right, so what does it say? This is 38, yes. And then after that, 37 is regarding the duty to report the fraud to CG, right? So question number 37, which is regarding the duty to report the fraud to CG, which is again an ATF, right? So likewise, have we totally looked into the questions up to question number 43? right, up to question number 43. Then later on we will see question 44 onwards. Are you understanding that? Right, so we are looking into the duties of the company auditor. Have we also seen duty as to branch audit? Yes, so now we need to discuss only one, which is the only one which we need to now discuss: duty to report the fraud to CG. Duty to report the fraud to CG, that is to the central government. Okay, right. What does it say? If an auditor, in the course of performance of his duties as an auditor, right? So again, an ATF 5-star, super important question over there, coming lot in the MCQs also. What does it say? If an auditor, in the course of performance of his duties as an auditor, so I was, like just doing my normal audit, true and fair risk assessment procedure, TOC, substantive and all. And if an auditor, in the course of performance of his duties as an auditor, has reasons to believe, not reasons to suspect. What is required is the reasons to believe, means you're pretty sure. Right, so reasons to believe that an offense involving fraud is being or has been, right? So present or past, it has already happened or right now it is happening in the company, involving an amount of 1 crore or above, is being or has been, right? So is or has been committed against the company by its officers or employees, it shall report the matter to the central government in the manner as may be prescribed. If an auditor, in the course of performance of his duties as an auditor, has reasons to believe that an offense involving fraud, involving an amount of 1 crore or above, is being or has been committed against the company by its officers or employees, it shall report the matter to the central government in the manner as may be prescribed. Is this clear to everyone? Yes, all of you, do you understand? Let us say the sentence once again. If an auditor, in the course of performance of his duties as an auditor, has reasons to believe that an offense involving fraud, involving an amount of 1 crore or above, is being or has been committed against the company by its officers or employees, it shall report the matter to the central government in the manner as may be prescribed. Okay, so what does that mean? The fraud could be of less than 1 crore or the fraud could be of 1 crore or more. Right. In both cases, whether the fraud is of less than 1 crore or it is 1 crore and more, after you finish taking your deep breath, then after that, what you're going to do? Immediately, but not later than 2 days. Immediately. So, no breathing for more than 2 days. Okay. Immediately, but not later than 2 days, right? The auditor, earlier, you know what it said? Only immediately. Now then, practically they started saying, will you not even allow us to breathe? Like they say, immediately report the matter. Then they brought a modification amendment in company law. They said immediately but not later than 2 days. Right? Immediately but not later than 2 days, the auditor will report the fraud to the audit committee board of directors as the case may be. The auditor will report the fraud to the audit committee board of directors as the case may be. Right? What does it say? So less than 1 crore or more than or equal to 1 crore. In both cases, first thing what is to be done? Immediately but not later than 2 days, the auditor will report the fraud to the audit committee board of directors as the case may be. Because we said now, every company is not required to constitute an audit committee. Okay, what will you report to the audit committee board of directors? The nature of the fraud, right? Then the amount which has been involved, right? Then also the parties which have been involved in the fraud. You will report to the audit committee board of directors, right? So the nature of the fraud, the amount involved and the parties involved in the fraud. Okay, and then in the board's report of the company, when the fraud is of less than 1 crore, in the board's report of the company, what reporting is required to be done? One, the nature of the fraud, then the amount involved in the fraud, right? Then the name of the parties if no remedial action is taken. If no remedial action is taken, then the name of the party is to be mentioned in the board report. And if remedial action is taken, then no need to mention the name of the parties, right? So when does the name of the parties come in the board report? When no remedial action has been taken. When does the names of the party come in the report? When no remedial action has been taken. However, if remedial action is taken, then you just mention about the remedial action taken, then no need to mention about the names of the parties. Are you understanding that? This is the story when the fraud is of less than 1 crore. What does it say? Immediately but not later than 2 days. You report the fraud to the audit committee board of directors. What will you report them? Nature of the fraud, the amount involved and the parties involved. Then in the board's report of the company, what reporting is required to be done? Nature of the fraud, the amount involved, name of parties if no remedial action is taken, and if remedial action is taken, then you mention the remedial action which is taken. So out of 3 and 4, one can come. Either 3 or 4, both cannot come. Is it right? 3 and 4, any one of the two can come. Okay. Now, if the fraud is 1 crore or above, right? If the fraud is of 1 crore or above, again what you do? Immediately but not later than 2 days, you report it to the audit committee board of directors, and now you seek their reply or response within 45 days, right? So seek their reply or response within the 45 days, right? So for 45 days you wait for their reply. So immediately but not later than 2 days, you've reported the fraud to the audit committee board of directors. Now you need to wait for their reply or response for how many days? 45 days. And then there are two possibilities. What they reply, or there is no reply of the audit committee board of directors. Are you understanding? Right. If they reply, then within 15 days from the date of reply. If they reply, then within 15 days from the date of reply. Then no need to wait for you to wait for 45 days. Do you understand that? Right, say today a fraud happened. Say today is 1st October. You know, by 3rd October, you have to report it to audit committee board of directors. Say they sent you a reply by 7th October. Okay, so now from 7th October within 15 days. Now from 7th October within 15 days. Are you understanding? Right, today a fraud occurred, say 1st of October. Then immediately but not later than 2 days you have to report it to the audit committee board of directors. 45 days these guys did not reply only. Then now what you do? Now within 15 days you have to report it to the central government. So if they reply within 15 days from the date of reply. If they don't reply, then within 15 days after the expiry of 45 days. If the audit committee board of directors reply, then within 15 days from the date of reply, and if they don't reply, then within 15 days after the expiry of 45 days. Why? Because I need to wait now for 45 days for them to reply. Because 45 days is the time limit which has been given. No. Are you able to follow this? Okay. Right. So what does it say? If they reply, then within 15 days from the date of the reply, what you do? Now you report the fraud. Right? The report on the fraud and also the reply response which has been received from the audit committee board of directors, and also any explanation from the side of the auditor. Now you report it to the central government, right? And if they don't reply, then what does it say? Within 15 days after the expiry of 45 days. Within 15 days after the expiry of the 45 days. Now what does it say? You report the fraud to the CG. The report on fraud which you had forwarded to the audit committee, now you report it to the CG plus a note. What note? There has been no reply of the audit committee board of directors. Now you will send this to the CG. This reporting of fraud to CG has to be done in which form? It has to be done in the form ADT 4. Right? The letter has to be addressed to the Secretary, Ministry of Corporate Affairs. Right, Secretary, Ministry of Corporate Affairs. Right, it has to be sent by the registered post acknowledgement due, followed by an email confirmation of the same. The membership number and the telephone number, right, of the CA should be mentioned in that particular reporting of the fraud. Right, the membership number, contact number of the CA should be mentioned. Then again it says this reporting of fraud has to be done on the letterhead of the CA firm. Right, it has to be done on the letterhead of the CA firm. Are you understanding that? Okay. These provisions are also applicable to the cost auditor under section 148, and also applicable to the secretarial secretarial auditor under section 204. Mutatis mutandis, that is what? As it is, also applicable to the cost auditor and also applicable to the secretarial auditor. So cost auditor comes to know of fraud. Does he need to report to CG? Yes. Secretarial auditor comes to know of fraud. Does he need to report to CG? Yes. Branch auditor comes to know of fraud. Does he need to report to CG? Yes. And what is the penalty if you don't report? Yes, you come to know of fraud, you have reason to believe, but you don't report. What does it say? In case of listed entity, 5 lakh, and other than listed entity, 1 lakh. Right? Listed entity, 5 lakh, and other than listed entity, 1 lakh. Right? Duty to report the fraud to CG. Right? Duty to report the fraud to CG. Are you understanding all the provisions over there? Right? What does it say? Fraud is less than 1 crore or more than or equal to 1 crore. In both the cases, first thing what you will do? Immediately but not later than 2 days reported to the audit committee board of directors. And then less than 1 crore, it also has to come in the board report of the company. However, if it is more than or equal to 1 crore, then seek reply response within 45 days. Then you may get a reply or you may not get a reply. In both cases, what you need to do, you need to report it to CG in form ADT 4. The letter has to be addressed to the Secretary, Ministry of Corporate Affairs, has to be sent by registered post followed by an email confirmation of the same. You can send it by RPAD or you can also send it by the speed post. Right? It can also be sent by the speed post. The membership number, the telephone number of the CA should be mentioned. Letterhead of the CA firm. If these provisions are applicable to the cost auditor and the secretarial auditor, mutatis mutandis. What is that? As it is. And penalty, if auditor does not report the fraud. For listed entity auditor, 5 lakh, and others it is going to be 1 lakh. Right? Listed entities it is 5 lakh, and other than listed entities it is 1 lakh. Are you understanding that? Duty to report the fraud to CG 143.12. Is it clear to everyone? Right? The duty to report the fraud to CG. Right? So if an auditor of the company in the course of performance of his duties has reasons to believe that an offense of fraud which involves or is expected to involve an amount of 1 crore or above is being or has been committed against the company by its officers or employees, it shall report the matter to the CG. What does it say? The auditor immediately but not later than 2 days. You need to report the matter to the audit committee, board of directors, seek their reply or observation within 45 days. If they reply, then within 15 days from the date of reply, you need to report it to the CG. And if they do, yes, you need to report it to CG. And if they don't reply, then within 15 days after the expiry of the 45 days. Then what does it say? You report the fraud to the CG along with a note that there has been no reply of the audit committee board of directors. Right? The letter has to be addressed to the Secretary, Ministry of Corporate Affairs by a RPAD or by speed post followed by an email confirmation. It has to be on the letterhead of the CA form containing the postal address, email address, contact number, telephone number, and signed by the auditor with a seal and also indicate his membership number. So this is all the area where they are asking the MCQs in the exam. Okay, whether speed post is allowed, whether email confirmation is required, should the seal of the CA be there, should it be on the letterhead of the CA firm, should the membership number be given, all of this. And the report has to be done in form ADT 4. And if the fraud is less than the amount specified above, then again first thing what to do, immediately but not later than 2 days, report it to the audit committee or the board, nature, amount and the parties. And what does it say? In the board's report, you need to give the detail, nature, amount, parties if remedial action not taken or the remedial actions taken if any. Okay. And what does it say? These provisions are also applicable to the cost accountant and the company secretary in practice. And what does it say? Yes, further over there, cost auditor, secretarial auditor, listed entity penalty 5 lakh, any other company liability penalty of 1 lakh. Right? Any other company penalty of 1 lakh. Are you getting this point, everyone? Obviously, and this reporting has to be done in good faith. Right? The reporting would be done in good faith by the auditor. Okay. Right. So what are the 4 forms which we've seen so far? We've seen ADT 1, ADT2, the ADT3 and the ADT4, right? ADT4 1, who needs to file? The company needs to file with the ROC within 15 days of the appointment of the auditor. Within 15 days of the appointment of the auditor, the company needs to file the form ADT1. Then company needs to make an application to CG within 30 days of passing of the board resolution for the removal of the auditor, for the removal of the auditor before the expiry of his term, for the removal of the auditor before the expiry of his term. Is it right? Right. Then ADT3, it is the auditor who has to file it with the company and the ROC, and in case of a government company also with the C and AG within 30 days from the date of resignation of the auditor. Within 30 days from the date of resignation of the auditor. And ADT4, again, who needs to file? The auditor needs to file it with the central government, right? Within 15 days, right? With reply or without reply. With reply or without the reply of the audit committee board of directors. Right, within 15 days after the expiry of 45 days, if there is no reply, and if there is a reply, then within 15 days from the date of the reply, he has to do the reporting of the fraud to the central government. Is it clear to everyone? Right, these are the forms we have been discussing: ADT1, ADT2, ADT3 and the ADT4. Clear to everyone? Right, so have we completed with the duties of the company auditor? What are the duties? Duty as to inquiry, duty as to reporting, duty to report on additional matters, duty to sign the audit report, duty for giving reasons for qualification in the audit report, duty as to branch audit, duty to comply with the auditing standards, and the last duty, duty to report the fraud to CG. Right, duty to report the fraud to the central government. Is it clear to everyone? Okay, right, so duty to sign the audit report, qualifications of the branch auditor, right? So that completes our discussion of section 143, which is regarding the rights and duties of the company auditor, right? So if I look at starting from section 139, what is 139? Appointment of the company auditor. 140, removal of the company auditor. 141, qualifications and disqualifications of the company auditor. 142, auditor's remuneration. 143, rights and duties of the company auditor. 144, auditor not to render certain services. 145, auditor to sign the audit report. 146, auditor to receive notice and attend the general meeting. So now we come to section 147, which is regarding the punishment for the non-compliance, right? So now coming to the next section, section 147, which is regarding the punishment for the non-compliance. Everybody with me? Right, punishment for the non-compliance. Okay, right, and right now this is trending. This is trending in the theory part. This is big time trending in the MCQ part also. So theory also yes, and MCQ also yes, trending at both places. Right, so we are talking about section 147, which is regarding the punishment for the non-compliance. And now, who could have done the non-compliance? The non-compliance could have been done by the company, or the non-compliance could have been done by the auditor. If company has done the non-compliance, one, who would be liable for the punishment? Company would be liable, and also any director, officer of the company. Even every officer of the company would be liable. Right, even the officer of the company would be liable. Right, company, what it has not complied with? It has not complied with the provisions of section 139 to section 146, both inclusive. And auditor has not complied with section 139, section 145 and section 144 and section 145. Right, so for auditor they are only talking about 139, 144 and 145. Right, so auditor only 3 sections. sections. But for company, they are saying all the sections, 139 to 146. But for auditor, only 3. Auditor has not complied with section 139 regarding appointment, 144 which is regarding not to render certain services, and 145 which is regarding the signing. Okay. Now, if the company has not complied with any of the sections of 139 to 146, what is the punishment for the company? It says 25,000, which may extend up to 5 lakh rupees. And every officer of the company, minimum 10,000, which may extend up to 1 lakh rupees. Right? So 25,000, which may extend up to 5 lakh. And every officer of the company, 10,000, which may extend up to rupees 1 lakh. Right? So this is the fine for the company. No imprisonment, nothing. Right? No imprisonment, nothing. 25,000 minimum, no, not less than 25,000, but cannot exceed 5 lakh. And for every officer of the company, not less than 10,000, which may extend up to rupees 1 lakh if the company has not complied with the provisions of section 139 to section 146, both inclusive. Okay. Now, auditor of the company, are you all with me? Yes, auditor of the company has not complied with section 139, 144 and 145, and he has not complied with these sections, one, unknowingly, and second, knowingly and willfully. And knowingly and willfully, you know you are the statutory auditor of the company. You should not be doing the actuarial services. But what you did, you still did the actuarial services for the company. Right? So one, what does it say? Unknowingly, by mistake, the auditor has not complied with these sections. Then what does it say? 25,000 or up to rupees 5 lakh or 4 times the remuneration of the auditor, whichever is less. So 25,000. So same like company. Same like company, 25,000 to 5 lakh. But what is the addition over there? Or 4 times the remuneration of the auditor, whichever is less. And if the auditor has knowingly, willfully not complied with the requirements of this section, then what does it say? 50,000, which may extend up to 25 lakh or 8 times the remuneration of the auditor, whichever is less. That means if your audit fee is 1 crore, up to 8 crore. And 8 times the remuneration of the auditor, whichever is less. Are you understanding? And it says punishable with imprisonment for a term which may extend to 1 year. And here in addition, what does it say? There is no minimum imprisonment, but what is the maximum imprisonment? Imprisonment up to 1 year, right? When the auditor knowingly, willfully has not complied with the requirements of 139, 144 and 145. Right, 139, 144 and 145. Okay, right, so company auditor, 1 point is it same, 25,000 to 5 lakh, 25,000 to 5 lakh. And what does it say? Or 4 times the remuneration of the auditor, whichever is less. And if the auditor knowingly, willfully has not complied with these sections, then 50,000, which may extend up to 25 lakh or 8 times the remuneration of the auditor, whichever is less, and imprisonment which may extend up to 1 year or with both. Are you understanding? Okay. Now, they are very, very angry with the auditors, and everybody always angry with the auditor over there. So now what does it say? Okay, auditor, you have not complied with 139, 144, 145. This is the fine which you will have to pay. And in addition to this fine, what do they say? Whatever remuneration you have received from the company, refund the remuneration received from the company. Oh my God. So first I may have to pay up to 8 times the auditor remuneration, and whatever remuneration I received, it says please refund back the auditor remuneration. You're not worthy of the remuneration, refund it. And so refund the remuneration received by the company. And they don't stop here also. What do they say? Pay the damages. It says pay the damages because of your non-compliance. Now, how many people are standing in the line? To the company, to the statutory bodies or the authorities or to the members or to the creditors of the company. Right, so now creditor of the company also auditor will have to pay. Statutory body, authorities, members, creditors, right? All of them, auditor, you have to pay the damages for loss arising out of the incorrect or the misleading statement or of the particulars made in his audit report, right? So for wrong audit report, it says you'll have to also pay the damages. Are you understanding that? Right, so one, refund the remuneration and also pay the damages, obviously. And also again same point, okay, for civil liability, who will be responsible? The firm will be liable, and for criminal liability only the concerned partners will be liable. Okay, right, so let's try to revise section 147 once again. What is section 147? Punishment for non-compliance. The non-compliance could be done by the company or the auditor. Company will be liable, also every officer of the company will be liable, right? For company it is 139 to 146, both inclusive. What does it say? Fine of 25,000 which may extend up to 5 lakh, and here 10,000 which may extend up to rupees 1 lakh. This finishes company. Then for auditor, 139, 144 or the 145 has not been complied with unknowingly. Then what does it say? 25,000 up to rupees 5 lakh or 4 times the remuneration of the auditor, whichever is less. And auditor knowingly, willfully, and has not complied with the requirements of these sections, right? Then what does it say? 50,000 or which may extend up to 25 lakh or 8 times the remuneration of the auditor, whichever is less, and imprisonment up to 1 year. And it doesn't stop over here. What does it say? Auditor, whatever remuneration you've received, you need to refund, and you also need to pay the damages, right? And you also need to pay the damages. And likewise, if you keep on doing the scribbling, and so like I've scribbled it again, no, whatever I discussed with you. So when you are also studying, you need to do the scribbling again and again, writing again and again, so that it gets imprinted into your mind, right? So that is section 147, which is regarding the punishment for the non-compliance. Right now this is trending in the exam, right? So contravention by the company, contravention by the auditor, 25,000 to 5 lakh or 4 times of the remuneration, whichever is less. However, if the auditor has contravened with these provisions, knowingly or willfully, with an intention to deceive the company, shareholders, creditors or tax authorities. Company, shareholder, creditor or the tax authorities. Punishable with imprisonment for a term which may extend to 1 year, and with fine which shall not be less than 50,000 but which may extend to 25 lakh or 8 times the remuneration of the auditor, whichever is less. And in addition to that, what does it say? Refund the remuneration and pay the damages, right? Also the report will be filed with the CG regarding the prompt payment of the damages by the officers, right? The prompt payment of the damages to the company by the auditors. And what does it say? In case of the firm will be jointly and severally responsible, but in respect of the criminal liability, only the concerned partner will be liable, right? Only the concerned partner or partners will be liable, right? So that is regarding section 147, which is regarding the punishment for the non-compliance. Yes. No, for the willful default. Yeah, because that it is coming only over here. Yes, for the willful. It is only for the second part over there. Convicted under subsection 2. That is under the second one. Right, only under the second one. Okay, right. Now coming to the next section over there, which is section 148, which is regarding the cost audit. Right, now coming to another section over there, which is section 148. So we finished all our discussion regarding the stat audit. So see now how it is. 138 is internal audit. Then after 138, 139 to 147, full collection is of the stat audit, and then 148 is regarding the cost audit. So in the beginning and end there are different audits, and in between it is the entire stat audit, right? So 138 internal audit, 148 cost audit, and in between you have the 139 to 147, which is regarding the stat audit, right? So now coming to section 148, which is regarding the cost audit. What does it say? Cost auditor, you have to express an opinion on the true and fair view of the cost of production, right? You have to express an opinion on the true and fair view of the cost of productions, the cost of sales, and the profits of the company, right? So who can be appointed as a cost auditor? An individual CMA or a firm of CMA is to be appointed as the cost auditor of the company. Before the appointment, yes, so this is the qualification for the cost auditor. Even statutory auditor, he needs to do the reporting for cost records under clause 6 of the CARO, whether cost records specified by the central government under section 148(1), whether such cost records have been made and maintained, right? Whether such cost records have been made and maintained. Are you understanding that? Okay, right. Then if we look into the appointment of the cost auditor, again now we have two possibilities. Company has an audit committee, company does not have an audit committee. If the company has an audit committee will make the recommendation to the board, and then the board will appoint the cost auditor. Then the board will appoint the cost auditor, and only the remuneration to be paid to the cost auditor, only the remuneration, not the appointment, is to be ratified by the shareholders subsequently. And subsequently it is to be ratified by the shareholders. Only the remuneration to be paid to the cost auditor. So audit committee is there, they will recommend who should be appointed as the cost auditor. Then that person will be appointed as a cost auditor by the board, and only the remuneration of the cost auditor is to be ratified by the shareholders. Okay, and if the company does not have an audit committee, then the board of directors will appoint the cost auditor. Then the board of directors will directly appoint the cost auditor, and again same, the remuneration of the cost auditor is to be ratified by the shareholders subsequently. So is the appointment of the cost auditors to be ratified by shareholders? Is the appointment of the cost auditors to be ratified by shareholders? No, only the remuneration being paid to the cost auditor is to be ratified by the shareholders. Are you understanding? And if company has an audit committee will recommend the appointment and the remuneration of the cost auditor. If company does not have an audit committee, then directly the board of directors. Are you understanding that? Then directly the board of directors, right? So this is regarding the appointment of the cost auditor. Then before the appointment of the cost auditor, should a written consent be taken from the cost auditor also? Should a written consent certificate, just as we were taking it from the statutory auditor, should it also be taken from the cost auditor? Yes, it should also be taken from the cost auditor, that he fulfills the criteria. The cost of audit appointment would be within the limit, that he is eligible to do the cost audit. Any orders or proceedings which are going on against the cost auditor. Are you understanding that? Right, then cost auditor, when he is doing the cost audit, he needs to follow the cost auditing standards. And a cost auditor, when he is doing the cost audit, he needs to follow the cost auditing standards. Then 143(12), duty to report fraud to CG. Is it also applicable to the cost auditor? 143(12), duty to report fraud to CG. Is it also applicable to the cost auditor? Yes, it is also applicable to the cost auditor. And then reporting by cost auditors. To whom do the cost auditors report to? They report to the board of directors, right? Within 180 days from the closure of the financial year. Within 180 days from the closure, from the completion of the financial year, they report to the board of directors, and the board of directors within 30 days from the date of receipt of the cost audit report have to submit a copy of the cost audit report along with an explanation for every reservation qualification in the cost audit report to the central government. Right, so reporting is done to board. Board within 30 days has to submit a copy of the report along with the explanation for every reservation qualification in the cost audit report to the central government. The central government may also ask for the additional information. And the central government may also ask for the additional information. So when is the reporting to be done by cost auditor? Within 180 days from the closure of the financial year. And when is the appointment to be done of the cost auditor? It is to be done by the board of directors within 180 days from the commencement of the financial year. Right, within 180 days from the commencement of the financial year. Right, so appointed by board, reporting to board, appointed by board within 180 days of the starting of the financial year, and reporting to board within 180 days from the closure of the financial year. Are you understanding? They are appointed by board, they report also to the board only, but appointed within 180 days from commencement and report to board within 180 days from the closure of the financial year. Are you able to follow this? Okay. Now, say these are all the companies. Do all companies need to include cost records in their books of account? These are all the companies in India. So all these companies, are they required to include cost records in their books of account? No, the central government will specify which companies are required to include the cost records. What is cost records? MLO, material, labor and other items of cost. Now, out of those companies which have been specified by the central government for the maintenance of the cost records, do all of them need to get a cost audit done? Yes, say central government has prescribed, say just example, these are 100 companies. Out of these 100 companies, say 80 companies need to maintain the cost records. Do all these 80 companies need to get the cost audit done? No. Again, the central government will prescribe which are the companies which need to get the cost audit done. So all companies which need to get a cost audit done have to maintain the cost records, but not necessary that every company which maintains the cost records has to get a cost audit done. You understand that, everyone? Okay. And here we have a super favorite question of ICAI, the exemption from cost audit. Right? When is a company, though it is maintaining the cost records, but it says holiday, no need for you to get a cost audit done. Exemption from the cost audit. Right. What is the exemption from the cost audit? One, it says if you're operating in an SEZ, a special economic zone or a specific economic zone. First one. Or more than 75% of your revenue is coming through exports, and that too in the foreign exchange. More than 75% of your revenue is coming from exports, and that too it is coming in the foreign exchange. So say a company is having a turnover of 1000 crore, 700 crore revenue is coming from exports. Do they need to get a cost audit done? Ayyo. Ayyo. What do I do of you? Which temple, which place do I take all of you now? 1000 crore. 700 crore revenue is coming from exports. Do they need to get a cost audit done? Yes. More than 75% revenue has to be from exports and foreign exchange. Now what to do? Go in LKG, UKG or what? You get washed off so easily. Anybody can fool you so easily. An institute is the best at doing that with you. No, how they say no? Do they need to get a cost audit done? No. Why no? Means, what is it? Have you like decided to give the wrong answers or something like that? It's like a dare, you know, okay, dare I give any right answer in the class. Is it something like that? Where does the confidence come from? No. And simple number, huh? Calculation also not difficult. 1000 crore, 700 crore revenue is coming from exports. Thank God I didn't ask whether the first I was thinking, my mind was preparing that question, whether the company is required to include cost records. I thought they will get confused. Listening for you to your answers since morning, I said no, I can't ask that question. So I thought, okay, let me directly ask them, does the company need to get a cost audit done? Yes. Why? Because only still some of you are thinking no. No. Okay. Right. What does it say? Because if more than 75% of the revenue is coming from exports through foreign exchange, then no cost audit to be done. Array, here only 70% of the revenue is coming from exports and the foreign exchange. So do they need to get a cost audit done? According to me, yes, they need to get a cost audit done. I don't know what you think about. Okay. Wonderful. Or it is engaged in the generation of the electricity, or it is engaged in the generation of the electricity for captive consumption, or it is engaged in the consumption of the electricity for captive consumption through a captive generating plant, or it is engaged in the generation of electricity for captive consumption through a captive generating plant. Yani ke in the entire factory premises, they've put these windmills over there, or they've put these solar panels over there, right? So that they are generating electricity. Are they selling the electricity to outsiders? No, they are using it for the captive consumption through a captive generating plant. So are they taking it from outside? No, they are generating it within the company itself. Or it is engaged in the generation of electricity for captive consumption through a captive generating plant. Then what does it say? You are exempt from getting a cost audit done. Exemption from the cost audit. Okay. One operating in an SEZ, or more than 75% of the revenue is coming from exports through the foreign exchange, or it is engaged in the generation of electricity for captive consumption through a captive generating plant, right? So we've almost discussed the entire provisions over here regarding the cost audit, right? We've discussed the provisions regarding the cost audit, right? So cost auditor, he has to express an opinion on the cost of production, right? So you want to check the cost of manufacturing or the production. Obviously, cost audit is in addition to the true and fair audit, right? It is in addition to the true and fair audit. Then central government will prescribe what are the cost records which are to be maintained, which companies have to maintain the cost records. So CRA1 is regarding the cost records. Are you all with me? CRA1, like we had ADT1, here we have the CRA1, which is regarding the maintenance of the cost records. What is cost records? Which give the unit cost of production or cost of operation or cost of sales or margin of a product of its each of its product or activity on a monthly, quarterly, half yearly, or on an annual basis. So which give the unit cost of production, sales, margin of a product on a monthly, quarterly, half yearly, or on an annual basis. That is the definition of the cost records. Are you all with me? Right, that is the definition of the cost records. Then what does it say? Under clause 6 of CARO, auditor, you have to report whether cost records have been made and maintained. Okay. Then is fraud reporting applicable to cost auditor also? Yes, it is applicable to cost auditor also. Exemption from cost audit. This is the ATF. Right, what does it say? One whose revenue from exports and foreign exchanges exceeds 25%, 75% of the total revenue, or which is operating in an SEZ, or it is engaged in the generation of electricity for captive consumption through a captive generating plant. Right, and then what does it say? The company needs to appoint a cost auditor within 180 days from the commencement of the financial year, and before the appointment, the written consent and certificate has to be obtained from the cost auditor, and after his appointment, now the company needs to inform the CG. In case of statutory auditor, to whom did the company inform? To the ROC. Here the company needs to inform to the central government regarding the appointment of the cost auditor. Are you getting that, everyone? Okay. And if the company has an audit committee, then the audit committee, the board will appoint an individual as a cost accountant or a firm of cost accountant on the recommendations of the audit committee. And the committee will also recommend the remuneration of the cost auditor. However, then the remuneration recommended by the audit committee has to be approved by the board and also ratified by the shareholders. In case of other companies which are not required to constitute an audit committee, which don't need to constitute an audit committee, the board will appoint an individual or a firm of CA as the cost auditor, and the remuneration of the cost auditor has to be ratified by the shareholders subsequently. Everywhere, what does it say? The the remuneration has to be ratified by the shareholders. The remuneration of the cost auditor has to be ratified by the shareholders. Then, before the appointment of the cost auditor, is a written consent certificate required to be taken from the cost auditor? Is a certificate required to be taken from the cost auditor? Yes. What certificate will you take from him? That he is eligible for appointment, that is satisfies the criteria provided under 141, that the appointment is within the limit, and the list of any proceedings against the cost auditor, right? This is an RTP question, so waiting list question. Right, certificate from the cost auditor, है ना? Just as from the statutory auditor you used to take the written consent certificate, you also need to take it from the cost auditor. What certificate you take from the cost auditor? That he is eligible, that he satisfies the criteria, that the appointment is within the limit, and also the list of the proceedings. And then cost auditor, what does it say? He has to submit his report to the company in form CRA 3. Okay, so CRA 3 is the format for the cost audit report, right? CRA 3 is the format for the cost audit report, along with its report qualifications or observations in form CRA 3, right? So that is regarding the cost audit report, right? CRA 2 is regarding what? CRA 2 is regarding when the company informs the central government regarding the appointment of the cost auditor. When the company informs the central government regarding the appointment of the cost auditor, that is CRA 2. Right, so CRA1 cost record, CRA2 who needs to appoint the cost auditor? The board of directors. So board of directors will inform the central government who has been appointed as the cost auditor, right? And then what does it say? The report has to be sent to the board of directors within 180 days from the closure of the financial year, and then within 30 days from the date of receipt of the report, a copy of the report along with the explanation for every reservation has to be submitted to the central government, and central government may call for further information and explanation, right? Central government may call for the further information and explanation, and it has been provided if the company has got extension of time of holding the AGM, then may file the form CRA 4 within resultant extended period of time, right? So if you got an extension for filing of financial statements, you also have an extension for filing of the explanations to the cost audit report, right? So what is CRA 4? It is the explanations to any reservations or qualifications in the cost audit report, right? Explanations for the qualifications in the cost audit report, which is to be filed with the which is to be filed with the central government, right? So that is CRA 1, 2, 3, 4. Right, that is regarding the CRA 1, 2, 3, 4, and that is our discussion regarding the cost audit. Did you understand that these are all the companies? Do all companies need to include cost records? No. Yes, the central government has prescribed which companies need to include the cost records in their books of account, and out of that further you have the which companies are required to get a cost audit done, which companies don't need to get a cost audit done. Operating in an SEZ, or more than 75% of the revenue is coming from exports in the foreign exchange, or it is engaged in the generation of the electricity for captive consumption through a captive generating plant. Are you able to follow this? Okay, right, let us come to the question bank. Mithas Limited, right, is a top sugar manufacturer and exporter in India, operating from the Noida specific economic zone. Finish. And a Noida specific economic zone means operating in an SEZ. Do they need to include cost records? Do they need to include cost records in their books of account? Yes. Do they need to get a cost audit done? No. Okay. Right. What does it say? It's revenue from sale export. Sale within India, 153 lakh. Sale outside India, 357 lakh. X, the auditor is of the view that the company is mandatorily required to include their cost records in their books of account and consequently conduct a cost audit. He also suggested the name of his friend who is a cost accountant in practice for the purpose of such cost audit. However, the management is of the view that neither required in that the company is neither required to include the cost records nor conduct the cost audit. Being an expert in cost records and audit rule, you are required to guide the management in this regard, right? So cost audit rules not to apply in certain cases. Now what does it say? Therefore Mithas Limited is required to include the cost records in their books of account. However, the company is not required to conduct the cost audit as it is operating in an SEZ, and the facts of the revenue given is not relevant over here. Do you need to calculate that 75%? No, the first exception only you can use. Company is operating in an SEZ, no need to get a cost audit done. But do they need to include cost records in their books of account? Yes, they need to include. Next question number 45. Pearl Limited is an exporter of the precious and semi-precious stone. Turnover of the company is 150 crore, out of which 105 crore is coming from the export business and remaining 45 crore is coming from the domestic sales. Amount received from export business is all in the foreign currency. Directors of Pearl Limited is of the opinion that cost audit is not applicable as maximum revenue has been generated from the export business, right? So 150 crore, 105 crore is coming from the exports. That is again only 70% is coming from the exports. It is neither operating from an SEZ nor is it involved in the captive power generation. That is why it needs to appoint a cost auditor and get the cost audit of the company, cost accounts of the company audited. Are you getting this question, everyone? Question number 45, right? That is question number 45. Then question number 46. Petro Limited is engaged in the generation of electricity for captive generation through a captive generating plant. Finish. Is engaged in the generation of electricity for captive consumption through a captive generating plant. The company is required to maintain the cost records. The company is of the view that it is not required to get a cost audit done. So refer heading cost audit rule not to apply in the given case. And what does it say? Petro Limited is not required to conduct cost audit as it is falling under the exemption criteria. Hence the opinion of the auditor regarding non-applicability of the cost audit is correct. Right. And then question number 47. What does it say? Before the appointment of the cost auditor, what certificate is to be obtained from the cost auditor, right? Before the appointment of the cost auditor, what certificate is to be obtained from the cost auditor, right? So question number 44 till 47. Right, question number 44 till 47 is regarding the cost audit, right? So 44, 45, 46 and 47, right? These are the questions which are there regarding the cost audit, right? These are the questions which are there regarding the cost audit. Is it clear to everyone? Right, now coming to the next section for our discussion. Right, now coming to the next one for our discussion, which is section 128, which is regarding the books of account, right? Coming to section 128, which is regarding the books of account. Okay. Right. Now, before we come to section 128, we first come to section 212 and section 213 of the Companies Act. Right. What is 212 of the Companies Act? It is regarding the book and paper or the book or paper. Right. What do you mean by book and paper, or what do you mean by the book or paper? And 213 is the definition of the books of account. Okay, what do you mean by book and paper or book or paper? It says it includes books of account. Book and paper or book or paper includes the books of account, and it includes the DVD WRM. What is DVD WRM? It includes the deeds, vouchers and the documents, and it includes the writings, minutes and the registers. The writings, minutes and the registers. Right, so DVD WRM. Right, this is what you mean by book and paper or book or paper. It includes the books of account and the DVD WRM. Deeds, vouchers, documents, writings, registers and the minutes. Are you understanding that? Right, sit straight in the class. There is no teacher, there is no board anywhere backside or anywhere, at another angle in the class. So look in the front. No need for you to lean against the wall. Not required. Right, so now coming to section 128, which is regarding the books of account, in which we are talking about two 212. 212 is book and paper or the book or paper. Next, coming to 213, which is again million dollar. Million dollar ATF, 5 star, super important. When I say 5 star, maybe you don't see a question directly over here, but somewhere later, overall it has an impact. And a financial statement level, assertion level. So this is something which is important at the subject level itself, though may not be relevant at the question level or the chapter level as such. So what do you mean by books of account? You say books of account of a company. So one, it says all sums of money received and expended by the company or matters in respect of which the income and expenditure take place. Simple language, it means the cash book. But in the exam, can I write cash book? No, I have to write down this wording. All sums of money received and expended by the company and matters in respect of which the receipts and expenditure take place. But in my mind, what I can keep? Cash book. Then all sales and purchases of goods and services by the company. That is nothing but the trading account and a trading and profit and loss account. Are you with me? Yes. Then the assets and liabilities of the company. That is nothing but the balance sheet and the items of cost as may be prescribed under 148. What are the items of cost under 148? It is nothing but the cost records, MLO, material, labor, and the other items of the cost. Okay, right. So this is the definition, very important, of the books of account and a definition of BOA. What do you mean by books of account? Okay. Right. So what do you mean by books of account? All sums of money received and expended and matters in respect of which the income and expenditure take place. Simple language, cash book. All sales and purchases of goods and services by the company. Simple language, trading account. All assets and liabilities of the company. Simple language, balance sheet. And items of cost as may be prescribed under 148. That is simply the cost records of the company. Is it clear to everyone? Right, this is the definition of the books of account. Right, so book and paper on the book or paper. Then the maintenance of the books of account. That is, we are talking about the place of maintenance of the books of account. Where should a company maintain this books of account? What does it say? The book should be maintained at the registered office or a place which has been decided by the board, and within 7 days of the passing of the board resolution, the new address is to be intimated to the ROC. Right, so you say a company should maintain books of account. Where should it maintain books of account? It says registered office. By default, where should a company books be? Registered office. You want to keep it at any other place other than registered office, then what does it say? Board resolution to be passed, and within 7 days of passing of the board resolution, the new address is to be intimated to the ROC. Are you understanding? Place of maintenance of the books of account. Okay, keep at its registered office, or what does it say? Is the proper books of account. And what is the place of maintenance? They have to be kept at the registered office or such other place in India. So either keep them at the registered office or such other place which the board of directors decide, and within 7 days the new address, full address, is to be intimated to ROC. Okay, then also we have a question over there regarding the proper books of account. Right, now we've already discussed this. Okay, when would you say that a company is maintaining proper books of account? If they give a true and fair view, double entry system of the accounting, and also the accrual basis of the accounting, and also the accrual basis of the accounting. Right, so that is what you mean by the proper books of account. Okay, where should a company keep its books of account? Where? Place. What is the place? Where should a company keep its books of account? Registered office or place decided by the board. Okay. Now, so now say instead of registered office, a company is having corporate office in some other city. So they passed a board resolution कि our books are kept at the corporate office. Okay. But now what about the branches? Branches will to maintain the books at the branch only. So branch is not maintaining the books at the registered office or the place decided by the board. Then how will branch comply with the requirement of place of maintenance of books of account? Are you understanding the question? How will the branch comply with the requirement of the place of maintenance of the books of account? So what does it say? Summarized returns are to be sent periodically by the branch officers to the registered office or to the place decided by the board. Right, so now branch, how will you comply with the requirement of place of maintenance of books of account? It says summarized returns must be sent periodically by the branch office, where? To the registered office or to the place decided by the board. Then it will be considered that yes, even branch is maintaining the books at the proper places. Because say if a company is having a registered office, say in Gujarat, right? However, say it is having its corporate office in Maharashtra, right? And it is maintaining its books of account in Maharashtra. So now board of directors would have passed a board resolution. But say the company also has a branch office in Tamil Nadu. Now, obviously, now this Tamil Nadu branch is going to be maintaining the branch books in Tamil Nadu. So now, how will this Tamil Nadu branch comply with the requirement of maintaining the place of maintenance of books of account? So it has to send summarized returns periodically, either to the registered office or to the place which has been decided by the board. Then it will be considered that branch has also complied with the requirement of place of maintenance of the books of account. Are you understanding that? Okay. Then who can inspect the books of account of the company? It says any director of the company during business hours, he can inspect the books of account of the company. Right, now you want to inspect the books of account of a subsidiary company. For inspecting the books of account of a subsidiary company, a person has to be authorized by a board resolution. Only then that authorized person can inspect the books of the company at the subsidiary. So, I am a director of Growth Limited. I want to inspect the books of Growth Limited. Can I inspect it? Yes. During business hours, I can inspect. I want to inspect the books of the subsidiary of Growth Limited. It says I cannot inspect unless and until it is a person who is authorized by the board resolution. Are you able to follow this, everyone? Right. And obviously, whenever the inspection is made, all assistance which they can reasonably give, they should be given by the officers and the employees. Then, how many years this company needs to maintain the books of account? It says 8 years. If the company is in existence for less than 8 years, then all the years. Now, this is obvious, no? If our company create karke only after creation, it's just been 2 years that you created the company, then for how many years you'll keep the books? For 2 years. But if company is in existence for more than 8 years, then for how many years you need to keep the book? For 8 years. And if it is in existence for less than 8 years, then how many years you have to keep the book? For all the preceding years. And say central government has ordered an investigation into the company, then the books are required to be kept for such longer period as the central government may deem fit. It's the central government has ordered an investigation and they say we are going to look into your books for last 12 years. Then do you need to keep your books for the last 12 years till the time the investigation is going on? The investigation is going on for next 3-4 years or so. So it says for such longer period as the central government may deem fit. Right? So that's a brief discussion regarding section 128. Maybe directly at final level there may or may not be a question, but indirectly if we don't know these base, there are many other MCQs or questions which we are not able to solve. Right? So what is it? One, the definition of book and paper or the book or paper, then the place of maintenance of books of account, then what do you mean by the proper books of account, then we talked about the branch books of account, is it right? Right, then we talked about the inspection of the books of account. They can be inspected by the directors during the business hours. And then we also talked about the period of maintenance of the books of account, that is the retention period of the books of account, right? The period of the maintenance, retention of the books of account. So how many years they are to be retained? They have to be retained for 8 years, right? So that's our brief discussion of section 128, which is regarding the books of account. Are you all with me? Right, section 128, which is regarding the books of account. Okay, now coming to the next one over there, section 129, which is regarding the financial statements. Okay, and here first what happens, again they go to the definition section, and what do they define? Okay, what do you mean by financial statements? So as per section 2 clause 40, what do you mean by financial statements? Balance sheet, profit and loss, cash flow statement, statement of changes in equity, any explanatory note, and what does it say? In case of the financial statements of the three best friends, which are the three best friends? One person company, small company, and the dormant company may not include the cash flow statement. So I see a MCQ over there. And okay, one person company, small company, dormant company may not include the cash flow statement. Right, one person company, small company, and the dormant company may not include the cash flow statement. Are you getting that? Okay, then what does the financial statements, when will they be considered to be giving a true and fair view? If they are in compliance with the accounting standards and schedule 3. This though we had studied in our discussion of the AFRF only. You remember AFRF? Yes, okay, financial statement shall be considered to be giving a true and fair view if they are in compliance with the accounting standards and schedule 3 to the Companies Act. Is it clear to everyone? Yes. However, schedule 3 to the Companies Act in AS. So AS notified under 133. So if Ind AS is applicable, then Ind AS. Okay, so AS and schedule 3. However, which are the companies to which schedule 3 is not applicable? Insurance company, banking company, electricity supply company, and any other class of company where the format has been given under the respective law. Right, any other company where the format has been given under the respective law. Is it clear to everyone? Right, then central government has exempted the companies which are engaged in the defense production to the extent of application of AS on the segment reporting. Right, so again that is an MCQ. Right, that segment reporting not applicable to companies which are engaged in the defense production. Right, so defense production, because when you come to the AS 17, there they also have a applicability of AS 17. But here it says if the company is engaged in the defense production, that is they are making some jets or something, you know, some propellers for the aircrafts or something, then what does it say? Defense production to the extent of the application of the relevant AS on the segment reporting, they are exempted. Okay, right, now these financial statements are being prepared. How they have been prepared? As per the AS and Schedule 3. Now, what to do of these financial statements? They have to be laid before the members of the company by the board of directors. So, at every AGM of the company, the board of directors of the company shall lay before the company the financial statements for the financial year. Right, so now that the company has prepared financial statements, now what to do of that? The board of directors should present it before the shareholders of the company, where at the AGM of the company. Are you understanding that? Okay, right. Then if the financial statements do not comply with an AS, then the financial statements will disclose the deviation from the AS, the reason for the deviation, and the financial effect of such deviation. Right, so any accounting standard not followed, what will management disclosed in the notes? The deviation from the AS, the reason for the deviation, and the effect of such deviation. And where will auditor mention in his audit report? If anybody is paying attention, where will auditor mention in the audit report? 143.3, 143.3E. Right, information proper, branch books, AS adverse, whether financial statements comply with the AS. Where is it? Right, whether the financial statements comply with the accounting standards. So where will auditor report? Auditor will report under 143.3E. If company does not follow the accounting standard, where will management report? They will report it in the notes to account. And where will auditor report? Auditor will report it under 143.3E, whether financial statements comply with the AS. Are you able to follow that? Okay, right. So if any AS has not been followed, and periodical financial result, what does it say? The central government may prescribe class or classes of unlisted companies, because listed companies, so as per SEBI guidelines, they have to declare their quarterly result. This is for the unlisted company to prepare their financial results on a periodical basis, to obtain approval of the board of directors and complete audit or LR. You remember audit or LR? Audit standards on auditing, LRSRE, standards on review engagement, and file a copy with the registrar within a period of 30 days of the completion of the relevant period with such fees as may be prescribed. Right? So even unlisted companies, they may be required to file their periodical financial results. Right? Even the unlisted companies may have to file with the ROC their periodical financial results. Are you getting? To prepare the, so what if you are not listed? It says still prepare your financial result, get them approved by the board of directors, get an audit or an LR done, and also file a copy with the ROC within 30 days. Right? These sections I'm just quickly scanning through. You know, we are not getting into that much as the detail as we went for 139, 140 or so. But because they have a passing relevance in our syllabus, we are going through these particular sections. But obviously, these are again the building blocks, and we have to know these ones also. Right? So 128, books of account. 129, financial statements. Now coming to 130 and 131, which is regarding the reopening of the accounts and the revision of the financial statements and the board report. Right? So this is trending. Section 130 and section 131. What is 130? Reopening of the accounts, right? What is 130? Reopening of the accounts. And what is 131? Revision of the financial statements and the board's report. Revision of the financial statements and the board's report. Are you all with me? Reopening, है ना? Opening, right? So that is section 130, and then the other one has to be 131. Are you all with me? Right? Reopening of the accounts and the revision of the financial statements and the board report. Okay, but before I come to 130, 131, let us see what is happening in the question bank, because that we cannot forget, no? Okay, so coming to question number 48. And so we said how many? 63 questions were there, na? Some 60 plus questions were there, but pretty decent. We've reached up to 48. Write short note on proper books of account. And the audit report of a company states that proper books of account as required by law, have they been maintained by the company? What is the role of the statutory auditor of a company when a company may said to have not maintained proper books of account? Yes, where is the statutory auditor required to report regarding the proper books of account? Look at this chart over here. Right, duty as to reporting 143(3)(b), where the proper books of account as required by law, have they been kept by the company? And what did I tell you? What you mean by proper books of account? True and fair view, double entry system, and the accrual basis of the accounting. Are you able to follow that? Right, the maintenance of the books of account, where you have to report 143(3)(b). Did we see 143(3)(b)? Right. Do you know the 10 points of 143.3? 10 words. Information proper, branch books, AS adverse, directors maintenance, IFC others. 143.3. 10 points. Today we studied now 143.1, 6 points of inquiry. 143.3, 10 points of reporting. What are the 10 points? Information proper, branch books, AS adverse, directors maintenance, IFC others, and under others we have 8 points over there. Right? We have these, so then 8 points over there. Okay. Right? So question number 48, which is regarding the books of account. Right? Question number 48, which is regarding the, right? So over here we can write down question number 48, which is regarding the books of account. Okay, right. Then after that, what do we further have over there? As an auditor of a company registered under section 8 of the Companies Act, you find that as per the notification of MCA regarding applicability of Ind AS, the company has to prepare its financial statements for 2019 under the Ind AS. The management of the company is, however, of the strong view that being a section 8 company having charitable object, Ind AS cannot apply to the company. The financial statements are therefore prepared by the management under the earlier gap, and a note for the same is given in the financial statements. How would you report on these financial statements? Right? So again, Ind AS, what does it say? Is it not applicable? a Section 8 company, Ind AS not applicable? No, Ind AS is applicable based on the monetary limits. Okay, so as per sections norms for financial statements under 133, the said rules list the Ind AS and the classes of companies which have to comply with the Ind AS. It may be noted that companies covered under Section 8 are required to comply with the provisions of the Companies Act unless and until any exemption is provided. Companies registered under Section 8 are not exempted from the requirements of 133 and 129. What is 133? AS. And what is 129? Financial statements. In the given case, only contention of the management that being a Section 8 company having charitable object, Ind AS cannot apply to the company. Therefore, financial statements under earlier gap and a note for the same is given is not attainable. Okay. However, the auditor is required to ensure the applicable monetary limits with respect to Ind AS and need to advise the management to prepare the financial statements as per the Ind AS accordingly. In case of non-compliance, the auditor should report accordingly. Right? In case of non-compliance, the auditor needs to report. Right? So regarding the financial statements, which question number we have over there? Question number 49. Right? We have the question number 49, which is regarding that Ind AS also is, yes, for Section 8 also is Ind AS applicable? Yes, for Section 8 also, as Section 128 and 129 is applicable. Okay, so now coming to question, yes, Section 130 and Section 131, which is regarding the reopening of the accounts and the revision of the financial statements, certainly also brings for me the faint memory of SA 560. Does it also bring to me a memory of SA 560? Yeah, because as per auditor it could be. And a fact which becomes known to the auditor after the date of the audit report also, or it could be after the date of the financial statements also. Okay, so now reopening of the accounts. Okay, you know books of account now. Do you know that? Books of account. Did we study the definition? What is the definition? Yes, cash book, trading account, balance sheet, and cost records if prescribed by the central government. And now you prepared your books of account for a particular year, and now you have closed those books of account. And a close 31st March 2017 history. And okay, these books of account of the company have been closed, or 2020, these books of account of the company have been closed. But now you say, no, 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 we want to reopen these books of account. We want to open these books of account again. So now, yes, scan it like easily. Oh, you want to open the books of account? Take this, open the books of account, just a folder, double click and it will open. Or just a file, and then you just flip the page and it will open. No, what does it say? Unless and until an application in this regard has been received by the regulatory authority. So first requirement, unless and until an application in this regard has been made by the central government, income tax authority, SEBI, or any other statutory regulatory body or authority, or any other person concerned. That is part 1. And part 2, an order has been made by a court of competent jurisdiction or to the tribunal to the effect that. So this pink and purple have to come together for reopening of the accounts. Don't write in exam. Pink and purple have to come together. You understand? No. What is the pink and purple over there? Unless and until an application in this regard has been made by the regulatory authorities and an order has been passed by a court of competent jurisdiction or the tribunal. So what is required is application and order. Is it right? What is required is application and the order. And then after that, what does it say? To the effect that, what should the application and order be? That the relevant earlier accounts were prepared in a fraudulent manner, or the affairs of the company were mismanaged during the relevant period, casting a doubt on the reliability of the financial statement. So what does it say? Whatever accounts were earlier prepared were satyam, fraudulent manner, or the affairs of the company were mismanaged during the relevant period, casting a doubt on the reliability of the financial statements. Are you getting that? Then the notice shall be given by whom? By the court or the tribunal in this regard. Then no order can be made for reopening of the books of account for a period earlier than 8 years, immediately preceding the financial year. However, where a direction has been issued by the central government, then can it also be done for a period longer than 8 years? Yes, then may be reopened for a within such longer period also. Right, so what is the nice points which we get to read in this particular answer? Application and order to the effect that the relevant accounts, earlier accounts were prepared in a fraudulent manner, है ना? Accounts were prepared in a fraudulent manner, or the affairs were mismanaged. है ना? Keywords are very important. Accounts were prepared in a fraudulent manner, or the affairs of the company were mismanaged during the relevant period, casting a doubt on the reliability of the financial statements. A notice order has to be given by the court or the tribunal to the any other party or person concerned. Then no order can be made for reopening of the accounts for more than 8 years. However, if the central government has ordered and maintaining the books for a period longer than 8 years, direction and an investigation is going on of the central government, then can the books be reopened for a period longer than 8 years also? Yes, then they can be reopened for a period longer than 8 years also. Okay, right? Question number 50. Right? ALM Limited is into the business of trading of toys since 2001. The company was performing well till 2015, and after that sales started showing downward trend. The company had borrowed working capital fund from LP Bank on LP Bank Limited. On 1st August, account of the borrower was classified as NPA. Bank appointed forensic auditor to identify if any diversion of funds is there or not. Forensic auditor confirmed the diversion of funds. So first your mind says, oh, maybe forensic audit chapter. Matter went to the court of law, and company was asked to recast its financial statements for the last 5 years. Management contended that Companies Act does not allow recasting for more than 3 preceding financial years. Do you agree with the views of the management? Right? So what does it say? The contention of ALM that Companies Act does not permit recasting for more than 3 preceding financial years is incorrect, because how much of reopening of accounts is allowed over there? Up to a period of 8 years. And if the central government has issued a direction, then it can also be done for a period longer than 8 years also. Are you getting that? So question number 50. Right, question number 50. Right, reopening of the accounts. Is everybody getting this one? Right, this is also coming a lot in the MCQs of the paper. Right, so it is 80F, 130 and 131 both. Right, 130 is regarding the reopening of the accounts, and 131 is regarding the voluntary revision of the financial statements or the board report. Financial statements with section 129, and board's report with section 134. Are you understanding? So what does section 131 say? That if it appears to the director, now here what is the wording? Internally. Now there is no application and order. And for reopening, what was required was? For reopening, what was required was application and order. Here, what does it say? Internally. It appears to the directors of the company that the financial statement of the company, section 129, or the report of the board, 134, does not comply with the provisions of 129 or 134. They may prepare the revised financial statements or a revised report in respect of the 3 preceding financial years after obtaining the approval of the tribunal on an application made by the company. So now here, who needs to make the application? Application has to be made by the company. There the application was made by the regulatory authorities. Application made by the company, and then you get the approval of the tribunal. Right, then you get the approval of the tribunal by the company in such form and such manner, yes, as may be prescribed, and the copy of the order passed by the tribunal has to be filed with the registrar. And what does it say? Maximum 3 years. Right, so here what does it say? Up to a preceding, any of the 3 preceding financial years. Right, any of the 3 preceding financial years. And here what does it say? 8 years. right? And here, what does it say? 3 years. Voluntary revision of the financial statements. Is it clear to everyone? Right, so that is section 130 and 131, which is regarding the reopening of the accounts and also the voluntary revision of the financial statements and the auditor's report, right? The voluntary revision and the board's report, voluntary revision of the financial statements and the board's report. Okay, right? So what have we studied? Section 130, 131. Have we also done 128? Books of account. 129, financial statements. Now we've completed 130 and 131. Now coming to the next one over there, section 132, which is regarding the, yes, constitution of the NFRA, trending, right? Constitution of the National Financial Reporting Authority, trending, right? Lot of questions coming in the exam regarding the NAFRA, right? NFRA. What is NFRA? National Financial Reporting Authority, right? The National Financial Reporting Authority, right? The NFRA, right? You have the NFRA, Rashtriya Vittiya Reporting Pradhikaran, है ना? That is what they call it as the National Financial Reporting Authority. And what are the orders which have been passed by the NFRA, right? Lately, what are the orders which have been passed by the NFRA, right? So it says the order, not lately, but say some time back, right? In case of CA Som Prakash Agarwal, right? ICI membership number and information was received from SEBI in case of Vikas WSP Limited, wherein it was stated that the company did not recognize the interest expense on the borrowing from its statement banks in the statement of profit and loss account, which resulted in the overstatement of the profit. So interest expense of borrowings has not been recorded, right? VWL is a company listed on the Bombay Stock Exchange and therefore the NDS is applicable to the company, right? They were appointed as the auditors of the company for the statutory audit. Engagement partner furnished a part of the audit file. A reminder was sent for SQC policy of the firm. SQC policy of the firm said that some audit documents are available in hard form, are of poor quality, and their copies were blurred, would be filed after getting digitalized with the help of a specialist. Right, on 4th of February, a questionnaire pertaining to the statutory audit was sent to the engagement partner, requiring him to submit his reply latest by so and so date. Also, as submission of the balance part of the audit file, he was again requested. After examination of the audit file and material, EP filed the written submissions in response. Then the online personal hearing was conducted, and in the backdrop of the events, all the materials on record have been perused, including the written responses before and after the issue of the show cause notice. And what does it say? Inadequate audit documentation by the engagement partner are some of the violations found. Major violations found. The main lapses on the part of the engagement partner were failure to report lapses in accounting of interest cost pertaining to the borrowing classified as NPA and other lapses conducted in the audit. Right, so that interest expenditure not being recorded on the borrowing. These are discussed as under, right? Failure to report, right? So whatever is the amount of that interest cost, it has not been recorded. Then the other borrowings, right? So again, 21 crore of the interest on the borrowings not recorded. Again, the correct accounting of the interest cost has not been done. And the EP had given an unmodified opinion on the financial statements, saying that the financial statements give a true and fair view. And other lapses, what does it say? Absence of audit documentation, poor quality of audit documentation, absence of audit evidence, absence of crucial audit evidence, absence of evidence of communication with the TCWG, non-engagement of an EQCR. A listed entity audit EQCR compulsory. And a listed entity audit EQCR is compulsory, right? Engagement partner has not complied with most of the essays, and this has made the audit work unreliable. Audit class is very important here. No, not important. Okay. In an audit class, very important. No, you should be knowing regarding what is the auditing standards. Your entire life and focus is on the accounting standards, IFRS, and so. But yes, if you're into audit practice, then that is again very important. Now, what does it say? Fails to disclose a material fact, fails to report a material misstatement, does not exercise due diligence or is grossly negligent, fails to obtain the sufficient information, fails to invite attention. These five are best friends. Keep on roaming together. 512, 612, 712, 812, 912. Those who understand, okay. Don't understand, let's read ahead. Okay, right. Yes. Then 143.9. Okay, auditor should do the audit in accordance with the auditing standards. Attention is invited to SA 200 that auditor needs to achieve the objectives of the standards. And then what does it say? The company was offered a one-time settlement proposal by the lender bank. Okay, regarding the interest. NFRA is not in possession of any material, right? The EP further informed. And then hence absence of working papers or deficiency in working paper in itself is not a professional misconduct. Where there are no adverse views about the audit opinion deficiency with audit working paper cannot constitute evidence against the auditor on allegations of misconduct, right? Then the allegations, evaluation of interest cost and all that was done, right? Then the EP, then the analysis, non-compliance with the standards, the auditing standards, then non-recognition of the interest. Just look at it. One point in the audit, what is that in the financial statements? Non-recognition of the interest. And then what does it say? Guilty of professional misconduct under 512, guilty of professional misconduct under 612, guilty under the 712, does not exercise due diligence, then 812, and then also guilty under the 912, right? Thus we can conclude that the charges of the professional misconduct. And then finally what does it say? Right, the order which has been passed against the chartered accountant in light of the proved professional misconduct, imposing a monetary penalty of 3 lakh and debarring for a period of 3 years from being appointed as auditor, internal auditor, or undertaking any audit in respect of the financial statements or internal audit of the functions and activities of any company or the body corporate, right? So what does it say? Imposing a monetary penalty of 3 lakh and debarring from practice for a period of 3 years, right? Debarring from practice for a period of 3 years, right? So if I come to section 132, right? If I come to section 132, punishment in case of the non-compliance, what does it say? In case of the, yes, not less than 1 lakh, but which may extend to 5 times of the fee received in case of individual, and not less than 5 lakh, which may extend to 10 times the fee received in case of the firm, right? So here it is for the individual as such. So how much they are putting? 3 lakh. And then what does it say? Or 5 times the fees received in case of individual, and debarring the member or the firm from being appointed as an auditor, internal auditor, undertaking any audit in respect of financial statements or internal audit of the functions and activities of any company, body, corporate, performing any valuation as provided under 247 for a minimum period of 6 months or such higher period not exceeding 10 years as may be determined by the NFRA, right? So what is the range? 6 months to 10 years, right? 6 months to 10 years. And here it is 1 lakh and 5 lakh. And 5 times, and yes, it could be 5 times the fee received or it could be 10 times the fee received. And what wordings we read over here? Being appointed as an auditor, internal auditor, or undertaking any audit in respect of the financial statements or internal audit of the functions and activities of any company or body corporate, right? So exactly the same wordings we see them over here. Right? Are you seeing what does it say? From being appointed as an auditor, internal auditor, or undertaking any audit in respect of the financial statements or internal audit of the functions and activities of any company or the body corporate, right? This is again against one more chartered accountant over there, right? And what does the last point over there say? Again, yes, imposition of a monetary penalty of 5 lakh, right? Imposition of a monetary penalty of 5 lakh and again debarred for 5 years from being appointed as an auditor, right? Debarred from being appointed as an auditor for 5 years. Are you understanding? Right? So NFRA is sitting on the heads of the auditor. You talk to the big four auditors, to the big four auditors regarding what work is going on right now. They say don't ask NFRA, some particular NFRA, peer review, quality review, so much of the regulation which keeps on happening over there, right? So now we are talking about the constitution of the NFRA, which is again trending right now. Lot of questions coming in the exam. And again, if I look at the question bank, what does it say? The applicability of the NFRA has come in the exam 2 times, right? The applicability of the NFRA has come in the exams 2 times, right? So that is question number 51, which is regarding the applicability of the NFRA. Are you all with me? Okay, right. So which companies and auditors of which companies will come under the lens of NFRA? Yes, which companies and auditors of which companies will come under the lens or will come under the capture or vigilance of the NFRA. So one thing I told you, whenever a list is being prepared, first person to go and stand in the list is the listed entity. Then after listed, next comes the unlisted. In unlisted, having paid up share capital of more than or equal to 500 crore or having the turnover of more than or equal to 1000 crore or having the LDD, loans, debentures and deposits of not less than 500 crore. Right? So for unlisted, 500,000 or the 500. And a paid up share capital, turnover and the loans, debentures and the deposits. Right? First is LC, listed companies. Then the unlisted public companies having paid up share capital of more than or equal to 500 crore or the turnover of more than or equal to 1000 crore or having in the aggregate the outstanding loan debenture deposits of more than or equal to 500 crore. Then 3 best friends again roaming together: insurance company, banking company and the electricity supply company. Right? So insurance, banking and the electricity supply. Do they roam together? Right? Insurance, banking and the electricity supply company. And banking company also, what does it say? It includes the corresponding new bank. Right? So any corresponding new bank which has been set up under the RBI regulations, right, under the banking company rule, it says even that subsidiary bank and all will be included. New bank, subsidiary bank will also be included in banking company. Then any other body corporate or a company or a person, oh my God, now they are not only talking about the body corporate or company. What does it say? Any body corporate company or a person or classes of body corporate companies or persons where reference is made by the NFRA to the NFRA by the CG in public interest. So who has made a reference to the NFRA? The CG. That what? It is in public interest that you please look into these body corporates, companies or persons. That you please look into these body corporates, companies or the persons. Or a body corporate which is incorporated, registered outside India, which is a subsidiary or associate of any of the companies referred to in A to D above. What is A to D? Listed companies, unlisted 500,000, 500, then 3 best friends, insurance, banking, electricity supply, then reference has been made to the NFRA by the central government in the public interest, and now it is a subsidiary of any of the companies referred in A to D above, which contributes not more than 20% of the consolidated income or the consolidated net worth of the company or the body corporate, right? So 20% of the conso income or 20% of the conso net worth, right? So say there is a company having a total consolidated income of 1000 crore and say out of that 250 crore is coming from this entity which is registered outside India and it is their subsidiary company. Can it come under the lens of NFRA? Yes, even that can come under the lens of the NFRA. Are you able to follow this? Yes, this is a do or die question. You cannot think like, audit procedure, open your audit compass box, say communicate to TCWG, obtain sufficient appropriate audit evidence, modify opinion, nothing. Here it is either you know it or you don't know it. There is no scope for creativity in this question. You cannot sit in the exam hall and decide, okay, I will tell you okay, which companies NFRA should look into. No. Yes, it is decided. Which is the companies which are decided over there? Listed companies. Then the unlisted public companies, 500,000 or the 500. Then what does it say? Insurance, banking, and the electricity supply, where any company where reference has been made to the NFRA by the central government in the public interest. And what does it say? Any body corporate which is incorporated outside India but which contributes more than 20% of the consolidated income or the net worth. Are you able to follow this? Okay, right. So is that one more list of applicability out of the applicabilities that we were studying today? So section 132, which is regarding the NFRA. I won't write it there. I'll write it down because more place will be required, right? So section 132, which is regarding the NFRA. Whenever a list is prepared, who is coming first and standing in the list? Right, the listed companies. Then apart from listed companies, what does it say? The unlisted public companies. Unlisted public companies having the paid up share capital of more than or equal to 500 crore or having the turnover of more than or equal to 1000 crore or having in the aggregate the loan debenture deposits of more than or equal to 500 crore. Right, that is second one. Then third one is the insurance company, banking company, and the electricity supply company. Is it right? Right. Fourth one is what? Where reference is made to the NFRA by the CG that it is in public interest. It is in public interest. And what is the last one? Where it is a body corporate which has been registered outside India, incorporated, registered outside India, but which contributes not less than 20% of the consolidated income or the consolidated net worth, right? 20% of the consolidated income or the consolidated net worth. If you are able to summarize, you are able to retain, you are able to remember, right? So what are the 5 points? One, right? This is point number one. Then unlisted public company, then the three best friends, central government, and then the body corporate. Right, and then the body corporate. So 1, 2, 3, 4, 5. Applicability of the NFRA, right? The NFRA, right? The applicability of the NFRA. Body corporate outside India which contributes more than 20% of the consolidated income or the consolidated net worth. If you want me to show it to you in a zoom manner. Okay, this is what I have written over there. What is this? This is the sign of aggregate. And aggregate, total. Clear to everyone? Yes. So what is the first thing which we have studied over there is regarding the applicability of the NFRA. Is it clear to everyone? Applicability of the NFRA. And then what does it say? Once the company has appointed an auditor. One, what did we say? After a company has appointed an auditor. After a company has appointed an auditor, what does it need to do? The company needs to inform the ROC, filing form ADT 1. Now what does it say? You also need to inform the NFRA, filing form NFRA 1. Right, so company needs to file the form NFRA 1 within 15 days of the appointment of the auditor. Within 15 days of the appointment of the auditor. Right, so within 15 days of the appointment of the auditor. Right, within 15 days of the appointment of the auditor, the company needs to inform the NFRA. Right, so company needs to file the form ADT 1 also and company needs to file the form NFRA 1 also. Are you getting that everyone? ADT 1 and NFRA 1. ADT 1 will go to the ROC and NFRA 1 will go to the NFRA. Okay, an auditor, what you need to do, every auditor referred to in the rule 3 above will file a return with the NFRA on or before 30th of November every year in form NFRA 2. So what auditor needs to do? Auditor needs to file the form NFRA 2, right? Auditor needs to file the return, right? Return means whatever audits he has done in form NFRA 2, when before, on or before 30th of November of every year, right? So auditor has to file the form NFRA 2. Company has to file the NFRA 1. Are you understanding that? So NFRA 1 and NFRA 2. Right? Who has to file NFRA 1? Company within 15 days of the appointment of the auditor. An auditor has to file a return in form NFRA 2 on or before 30th of November of every year, right? On or before 30th of November of every year. Are you understanding that? Okay. And now say the unlisted public company. Now say the unlisted public company had the paid up share capital of 600 crore, or say it had the turnover. Let's make it easy. Let's say it had a turnover of 1200 crore, right? So is NFRA provisions applicable? Unlisted public company having turnover of 1200 crore, are the NFRA provisions applicable, or does it come under the lens of the NFRA? Yes. Okay. Now say the turnover has become 900 crore. Will NFRA provisions be applicable? It says once applicable for 3 years, even after you fall below the limits or you cease to be a listed company. Once applicable for at least 3 years. A company or a body corporate other than a company governed on the NFRA rule shall continue to be governed by NFRA for a period of 3 years after it ceases to be listed. So you're no longer listed. You got yourself delisted. Still NFRA 3 years. Or paid up capital, but turnover or LDD, loan debenture deposit, falls below the limit mentioned in the point A to E above. So once applicable for 3 years, even after it is not applicable. You understand? No, so it was applicable. Then now you don't fulfill the criteria. Still, will you have to comply, or do you come under the lens of the NFRA? Yes, it says for 3 years you still come under the lens of the NFRA. So NFRA 1, then 3 years ka point, and then NFRA 2. So how to revise one day before the exam? You know this. Here there is NFRA 1 point, then once applicable for 3 years, even after not applicable, and then NFRA 2, auditor has to file on or before 30th of November. Are you getting that? Okay. In the exam, what question has come? 2 times? Yes, the applicability of the NFRA. Common sense says what? Okay, what one thing can happen? Same NFRA applicability, they can ask 3rd time. Yes, one, what can happen? They can ask it, ask it 3, 4, 5, 6 times till the time it gets settled over there. Or what they can do, they can proceed further in life. If they proceed further in life, next sitting on the target over there is the functions of the NFRA. Right, next sitting on the target over there is the functions of the NFRA. Okay, so now this National Financial Reporting Authority has been made, and so now it is an independent mechanism than ICAI also, which is regulating the chartered accountants and listed entity apart from the SEBI also. So are you getting? It's a National Financial Reporting Authority which has been constituted under Section 132 of the Companies Act. What does it do? One thing it is doing, it is taking away all the powers from ICAI. Like right now, who can issue the accounting auditing standards? We say ICAI can issue the accounting auditing standards. Now what will happen? ICAI will make the recommendations to the NFRA, and NFRA will pass on the recommendations to the central government for the issue of the standards. Okay, so make recommendations to the CG on the formulation and laying down of the accounting and auditing policies and standards for adoption by company classes of companies. So what is the one function of the NFRA? Make recommendations to the CG regarding the accounting and auditing standards. Then second, once so many accounting auditing standards have been issued, next what to do? Monitor and enforce compliance with the accounting standards and the auditing standards. So accounting standards have to be followed by the companies and auditing standards have to be followed by the auditors. So monitor and enforce compliance with the accounting standards and the auditing standards. So first what to do? Formulate and lay down the accounting auditing standards. Then monitor and enforce compliance with the accounting and auditing standard. And obviously if you ensure compliance with the accounting auditing standards, what are you doing? You're overseeing the quality of the service of the profession. And wherever you see, no, service of the profession, quality of the service is not good, they suggest the measures required for the improvement. And then last one is the balancing figure, such other functions as relating to ABC as may be prescribed. Right? So what are the functions of the NFRA? Make recommendations to CG, then monitor and enforce compliance with the accounting standards and the auditing standards, then oversee the quality of the services and perform such other functions as may be prescribed. Are you all with me? Make recommendations to CG for accounting and auditing standards. Then next what to do? Monitor and enforce. Can not only issue the standards, but checking whether everybody is following the accounting standards and the auditing standards. Then after that, oversee the quality of the services of the profession and perform such other services as may be prescribed, right? So that's a question regarding the functions of the NFRA, right? So that's the first important question, what we can mark it as an R raised to 10, which is regarding the functions of the NFRA. Right? What are the 4 functions of the NFRA? Make recommendations to CG, then monitor and enforce compliance with the accounting and auditing standards. Then what does it say? Oversee the quality of the services and such other functions as may be prescribed, right? Such other functions as may be prescribed. Okay. Right. Now for each of the first 3 functions, what are the first 3 functions of the NFRA? Make recommendations to CG, monitor and enforce compliance with the accounting standards and the auditing standards, and then oversee the quality of the services. For each of this, now we have a retail question over there. If you see the first point in your book, after the functions of the NFRA, what does it say? Recommending the accounting standards and the auditing standards. So that is function number A. Then function number B, monitoring and enforcing compliance with the auditing standards, right? So now, because it is in the audit syllabus, they've not mentioned about monitoring and enforcing compliance with the accounting standards. They are only talking about monitoring and enforcing compliance with the auditing standards. And then what is the next one? C, oversee the quality of the service and suggesting the measures for the improvement, right? Oversee the quality of services and suggest the measures for the improvement, right? So once when we study the functions of the NFRA in wholesale, now we also need to study the functions of the NFRA in retail. Are you understanding that? What is the first function of the NFRA over there? Make recommendations to the CG. Now, right, how will they make the recommendations to the CG? They say they will receive the recommendations from the ICAI and those recommendations they will pass on to the CG. Can they call for additional information from the ICAI? Yes, they can also call for the additional information from the ICAI. So they are like the in-between, the mediators now between ICAI and the CG. Right? They will receive the recommendations from the ICAI for the new AS or SA or amendment to existing AS or SA. So new accounting auditing standard or revision to any accounting auditing standard. Then they will seek additional information from ICAI, and then the NFRA shall consider the recommendations and the additional information in such manner as it deems fit before making the recommendations to the CG. So what they will do, they will receive the recommendations. Then those recommendations, they will send it to the CG, and then they will seek additional information. And again, that additional information, as it deems fit, it will consider and then make the recommendations to the CG. Are you understanding? Right? So they are like the in-between, the mediator between the ICAI and the CG. They will seek information from ICAI. They will receive recommendations from ICAI. They can also seek the additional information from the ICAI. And then they will, as deemed fit, they will further pass it on to the central government. Right? So that's the first one. Are you getting functions of NFRA? A, B, C, D. And now for A, we studied a Retail question. Now coming to the B. What was the B in the wholesale? Monitor and enforce compliance with the accounting standards and auditing standards. But in audit syllabus, what they have done? They've only kept regarding monitoring and enforcing compliance with the auditing standards. Right? So now they will pick up any CA firm, which is doing the audits of any of the 5 entities, no? Listed company, unlisted 500,000, 500, insurance, banking, electricity supply company, or central government in public interest, or 20% of consolidated income or net worth. They will pick up the auditors of any of this entities, and they will pick up the auditors of any of these entities, and what they will do, they will review the working papers which have been prepared by these auditors. They will also check the quality control system. They will also perform such other testing. Then they will also require the auditors to give a report on its governance practices. Okay, what are the governance practices of your firm? Right. Yes, what are the governance practices of the firm? It may also require the personal presence of the auditor. So can NFRA require the personal presence of the auditor also? Right? Are you seeing the point number 3 over there? The NFRA may seek additional information or may require the personal presence of the auditor for seeking additional information or explanation in connection with the conduct of the audit. Right? So what are we studying? Monitoring and enforcing compliance with the auditing standards. So NFRA will pick up any CA firm, and what will they do? They will review their working papers. They will check their system of the quality control. They will also perform such other testing. They will tell the CA firm, please give us a report on your governance practices. They may also require the personal presence of the auditor. Then it says this work either they can do on their own or they can take the help of the officers or the experts. Right? So you see point number 4, what does it say? Right? The NFRA shall perform its monitoring and enforcement activities through its officers or experts with sufficient experience in audit of the relevant industry. Right. Then after, either they can do it on their own or they can take the help of the officers and experts in the industry. And then whatever are the findings of the NFRA, they will publish those findings on their website. Did we just see them? Did we download the reports and just see those findings of the NFRA? Did they publish them on the website? Yes. Unless it is considered that in public interest, they should not do so. Right? Unless it is considered that in public interest, they should not do so. Right. So what are we discussing? I am waiting big time for a question to come on this one in the exam, because this is more of a possible candidate for a question. Right? It's just a matter of time, few years here and there. Doesn't matter to me, but matters to you, right? Regarding when the question comes. But sooner or later, this question is bound to come in the exam. And nowadays, so NFRE is making big noise. You understand? It's like the talk of the town. Right. So what does it say? One, for the purpose of monitoring and enforcing compliance with the auditing standard. What does it say? Review the working paper. That report which we saw right now, NFRA report for the chartered accountant. Did they look into the audit documentation? Did they check into the quality control system and all? Yes. Right. So review the working paper. Then check the sufficiency of the quality control system. Then perform such other testing. Then the report on the governance practices. They may also require the personal presence of the auditor. Then they can also take the help of the officers or experts. Then they can publish the findings on the website, unless it is in public interest not to do so. Then NFRA should not publish the proprietary confidential information unless it has reasons to do so in the public interest. And in case of the proprietary confidential information, what they will do, they will submit a separate report. So in case of the proprietary confidential information, what they will do, they will submit the separate report. And where NFRA finds or has reasons to believe, and where did we see reasons to believe today? 143.12, duty to report fraud to CG. So here also, what does it say? Where NFRA has the reasons to believe that any law or professional or other standard has or may have been violated by an auditor. So any law or professional or other standard has or may have been violated by an auditor. It may decide on the further course of the investigation or the enforcement action through its concerned division, right? So they can make the life of the auditor miserable, right? In that case, they are saying it in good words over here. You understand? What does it say? Further course of investigation or the enforcement action through its concerned division. And if you look at the beginning of the NFRA discussion, what does it say? Introduction, right? According to section 132, the CG by notification will constitute a NFRA, and the NFRA shall perform its functions through such divisions as may be prescribed. So one of the division will be to bring the chartered accountants online. And through such divisions as may be prescribed. So one of the division is going to be to bring the chartered accountants online over there. Are you understanding that? Okay. So monitoring and enforcing compliance with the auditing standards. Then what is the C point over there? Overseeing the quality of the service and suggesting the measures for the improvement. So what they are telling, array auditor, how you're doing audit, not good, take measure for improvement. Then once they tell the auditor to take the measure, the auditor is required to make the required improvement. Then the NFRA will monitor whether the required improvements have been made. Right? Then NFRA will also can refer these matters to the quality review board. We told them to improve, but did they really improve? Now they tell who to check it? The quality review board. And again, the NFRA may take the assistance of the experts. Right? So they can tell the auditor, okay, please improve. Take measures for improvement of audit quality, including changes in their audit process, quality control, audit report, and specify a detailed plan with the time limits. Then it shall be the duty of the auditor to make the required improvements and send a report to NFRA explaining how it has complied with the directions made by the NFRA. So take measures, then they have to make the improvements. Then NFRA will monitor the improvements made by the auditor and take such action as it deems fit depending on the progress made by the auditor. And NFRA may refer the cases for overseeing the quality of services to the QRB, that is the Quality Review Board. And if they cannot do the work on their own, what NFRA can do? They can always take the assistance of the experts. They could take the assistance of the experts for checking, monitoring compliance with the auditing standards also. Here for overseeing also, can they take the help of the experts? Yes, here also they can take the help of the experts. Have you marked the important words along with me? Take measures, make the improvement, monitor the improvement, then the quality review board, and take the assistance of the experts. Is it clear to everyone? Okay. And punishment in case of non-compliance. What does it say? The punishment have we already discussed, where professional or other misconduct is proved. They have the power to make order for. Where professional or the other misconduct. You know professional and other misconduct? Right, the two schedules to the Chartered Accountants Act, right? And this we have already discussed. And now see, ICAI keeps on conducting the CPE seminars, you know, the continuing professional education seminars. But it says these type of seminars could also be conducted by the, yes, the NFRA. The NFRA will also take suitable measures for promotion of the awareness and significance of the AS, SA, audit responsibility, audit quality, and such other matters through education, training, seminar, workshop, conferences, and publicity. So now it is not only ICAI who will conduct seminars and all. What does it say? It could also be the NFRA which could be conducting these seminars, right? So what are the two important questions which we have over here? Applicability of the NFRA, wholesale question on the functions of the NFRA, and then out of the wholesale are coming the three retail question. Make recommendations to CG, monitor and enforce compliance with the auditing standards, and then oversee the quality of the services and suggesting the measures for the improvement. And then we have a very, very small discussion over there, which is the director's responsibility statement, section 134, subsection 5. I will teach you one more, okay? Keep quiet, okay? Right, if you make noise, I'll teach two more. Keep quiet, okay? Right, we had discussed. You think, no, I want to stop more than you. What you're thinking about yourself? I want to stop more than you. Stop, speak. And I have to speak for more. So much of the book is still remaining. Where is the book? Here it is. So much is still remaining. Wait, don't make any noise. Now, contents of the audit report. Title, addressee, opinion, basis for opinion. If you don't know contents of audit report, now don't tell anybody where you've done audit class. Unnecessarily don't cut my nose. You understand? No. Title, addressee, opinion, basis for opinion, management's responsibility. Exactly. And a management going concern key audit matter, if any. But management's responsibility, 134 subsection 5, wherein we talk about the DRS, the director's responsibility statement. And what are the responsibilities of the directors? 3A, 1G, and 2S. What are the 3A? Accounting standards, then the accounting policies and estimates, and then the accounting records. Right? Whose responsibility? Director's responsibility. Then the accounts of the company are prepared on a going concern basis. Whose responsibility? Director's responsibility. And two systems. One system for IFC and second system for compliance with the laws. One system of the IFC and second is the system for the compliance with the law. These are the responsibilities of the directors. 134 subsection 5, director's responsibility statement. Director's responsibility statement 3A, 1G and 2S. 3A, which are the 3A's? Accounting standards, accounting policies and estimates, accounting records. What is the G? Going concern. And what are the two systems? One is the system for the IFC and second is the system for ensuring the compliance with the laws. Okay, right? So 134 subsection 5. What does it say? 3A, 1G and 2S, right? A and the A over there. Accounting standards, accounting policies and estimates, accounting records. Then the going concern. Then the internal financial control, the system. Right, for the internal financial controls to be followed by the company. So the system of the IFC and second is the system for the compliance with the laws. System of IFC and system for the compliance with the laws, right? So that is just a brief about section 134 subsection 5. Okay, what we are just left with in this chapter is one declaration and payment of the dividend, which is section 123, a detailed discussion regarding that, and then the salient features of the LLP audit. So dividend and LLP audit, these are the only two discussions which are remaining, right? So tomorrow we shall complete with these two discussions, also finish with the small chapter of the liabilities of the auditor, and also proceed to the next big chapter on the SEBI LODR, that is the audit committee and the corporate governance. Okay, bye bye.